morning, traders. I'm Dennis Dick.
And I'm Joel Elkanah, and welcome to Pre-Market Info.
We had a crazy close yesterday. Buy imbalances were driving the stocks up into the close. There was over $1 trillion worth of stocks to buy, and many stocks closing at the highs. A lot of these stocks are giving back those moves here this morning. We're going to explain that in a little bit more detail. FDO has earnings, and Biogen's ALS drug disappoints. And it's also same-store sales Thursday. Lots of retailers coming out with their same-store sales. Crazy close there, though, Joel.
Yeah, is the dumb money getting in now? Just like the dumb money was getting short at 1400. Now all the funds are piling in here. Are we just going to get a little shakeout? You were good at calling the rally off 1400. What are you thinking up here at 1450?
Well, we've got up here into the resistance area. Obviously, we drew it there. We talked about it on the show yesterday, saying this whole 1460 area, 1459. We were looking at the highs. We got and kissed it up here. Overnight high is 1456.25. The high yesterday, right there at the same spot. Or no, actually, what was the high yesterday, Joe?
58.
So you got this 1458 number here. I would definitely use that as resistance to start with, but most of these stocks were actually gave back a little bit. We were high and then we were peeling back, but then we closed really strong. And the reason for that is there was a lot of buy imbalances into the close. Stocks like ExxonMobil getting driven right up. Now, if you don't know what imbalances are, basically at 3:45 Eastern, the
and what do you have to? What data systems provide that? Not everyone gets that.
A lot of your retail traders probably don't get it, but a lot of software does too. So you want to ask your brokerage about the imbalances and if they provide that feed. If you're not getting that information, you're missing important information, though. CNBC often mentions them, but you can get the individual stocks, obviously. Stock like ExxonMobil had a lot of stock to buy. That data can actually be disseminated on the floor as early as 2:30, which is why you start to see this run-up in the stocks probably about 2:30, 3 o'clock, as they realize there's a lot of buy imbalances into the close. And buy imbalance just means that there's these closing orders, that there's more buy closing orders than there is sell closing orders, which is going to drive the closing price higher. What happens is, as high frequency traders, as other traders get the information, they basically buy the stock ahead of the imbalance, knowing that the closing imbalance will drive the stock higher. So there's basically just like a little arbitrage play there. Doesn't always work perfectly, but yesterday it did. There was huge buy imbalances and the stocks closed right on the highs. So any traders that had the information an hour before could buy those stocks and obviously sell them on the highs. So a lot of these stocks, bottom line, a lot of these stocks closed very high, not for fundamental reasons, but for order flow reasons. And those moves often do fade back. So actually I sold some of the closes as well. I sold Coca-Cola on the close. I sold I'm just trying to go through.
AT&T.
Yeah, AT&T was one that I actually missed on the close. I sold Verizon on the close, but all of these stocks ran up. So what you're seeing here this morning is a lot of those stocks are peeling back a little bit. Like look at the AT&T, Joel. $35 is where it closes, trading at $34.81. Now the SPOOs are down a little bit, but obviously that's down a little bit more than fair value would dictate, just because it had that 40-cent run up basically in the last hour.
Okay, and just a couple caveats here to mention. I mean, number one, that information is put out because the specialist, is looking for people to help him offset, the buy or sell imbalance. So it's just a way, to see what side the specialist is going to be on. Second caveat: if this is going on during an expiration, a monthly or a triple expiration, you have to be extremely careful because there's a lot. The balances can change from buy to sell and back to buy again. So you got to be very skilled in this strategy, especially around the expirations. And then the last point is make sure you get your order in. I've played this trick a few times, and I've tried to wait to the last second to get my order in. So make sure you know how many shares you're long, and be able to get that order in to New York to make sure you don't miss that print.
This is where different order types can help too. Like we always talk about different order types and how there's too many. There's actually, these ones are helpful. Limit on close you can send from certain retail brokerages where it will just fill you on that closing print. So you can put your price. If it closes above that price, you'll get filled on the closing print. You can also send market on close, which guarantees you get in in closing print. I never like to use those that much though, because something funny can happen, the imbalance could flip, and then you're guaranteed so you could end up selling at a bad price. But if you use limit on close orders, those can sometimes work a little bit better. But we don't want to talk about all this all day. Let's talk to what actually is moving here this morning. We do have a big earnings report from Family Dollar. The stock actually trading down significantly right now. They disappointed 69 cents against estimates of 75. They lowered guidance for next quarter $1.18 versus $1.28. They were up at $1.39. This is down $5.50 right now, Joel.
Yeah, looking at the pre-market activity here, when that news came out, you got a spike to 58.06, and then you're getting a little bit of a rebound. Really don't understand these stores fundamentally. I mean, I never go in there, and I've never spent $1 in one of these stores. So, I mean, you got to sell a lot of things at $1 to make money. But they seem the stock's been doing extremely well, starting to give a lot of it back. It looked like that $61 level was critical. We've taken that out. Now, when you're going to the daily chart, you're in this whole vacuum area, Dennis. We talk about it all the time, between 55 and 60. So, keep your eye on that pre-market low. But I really don't see anything major, major support until the $55 area.
I gotta tend to agree with you. I don't see much in there either, and you often do see follow through in some of these retailers too. So just because it's down $5, I don't see it just bouncing back here and getting all the gains back. And a lot of times you see continued follow through when the stock's open in the regular session. So it's trading up at 59 now. Biogen, BIIB, is another one here, 141.95. It's trading after closing at $150. Their ALS drug failed to meet a primary endpoint in its trial, so that's what's knocking the stock down $8.
We talk about this all the time with these biotech stocks, and more biotech than the healthcare stocks. I mean, you got to expect these kind of moves when they announce the trials. It's just a thing you have to deal with if you trade these stocks. The pre-market low might have got a little overdone here. We've hit 138 in the pre-market when the news came out. Having a nice rally now. The rally stalled at 142.50, so that's what I'll use as my parameters: 138, 142.50. And if you get through that 138 level, you also have a major bottom just below that at 137.60. So if you're looking to bring some shorts in, I think you look at that 137.60 to 138 level.
Is same store sales Thursday. Lots of retailers reporting here. The Limited LTD is one that disappointed. Stock 3% where their same store sales estimates were up for 4.5%. So the stock is trading down almost $2 here. Interesting level, trading at 45.50. And if you look here at the low from December, was 45.55. Back in November you had a low of 44.93. So call that $45 area pretty major support.
Yeah, and just coincide with that, the low on the 27th was 45.26. So there's your major support for the Limited.
Target also reported their same-store sales. They were kind of light, but they actually raised their guidance for next quarter, $1.64 to $1.74 from $1.50. So despite the same-store sales not being fabulous, the guidance is bringing the stock higher. I've drawn this trend line here where it looks like we're going to get towards the upper end of this trend line. We're trading 60.21 right now after closing at 58.82.
Yeah, 60.25 was the high on December 21st. Coincides with the pre-market activity right now. Expect a few sellers there. Probably some stock laying in the book too there at 60. Above that, things really open up to the $61 level. 61.03 was the high on December 20th. But here's one of these charts where you've sold off from 64.50 to 58. And you're getting a $2 bounce. So it'd be interesting to see if it can maintain this, or the bottom pickers are going to be looking to get out on this pop.
Macy's also reporting same-store sales. And they actually, $1.91, their lowered guidance just slightly, $1.91 to $1.96. It was up at $1.94 to $1.99. Stock trading down just 30 cents right now here. So looking a bit weaker. It was trading down a little bit more earlier, though.
Yeah, look at yesterday's range in that. I think should be good parameters. 38.05 was the low. If you can't hold this 38.05, really no support until hard to get the day straight here. Monday's low of 37.17, kind of a vacuum area there under 38. If you start to sneak back up, I'd use the close as resistance 38.31.
The Gap GPS also reporting same-store sales up 5%. Stock trading significantly higher here in the pre-market. $33 right now on 67,000 shares after closing at 31.37. So a nice spike here for the Gap.
Yeah, as long as it holds in this 32.62 area, that was a high in the 19th. It looks like you get in another vacuum area
Yeah, you
back up
do.
well over 34. So a lot of air in these stocks up here.
Let's just look at Apple here. Obviously, it ran up a little bit into the close as well with the overall market and everything else. But the stock is giving back a little bit here today. We talked about this 550 being a critical level. It did take it out on yesterday's open, but then pierced it, traded down, got all the way down to 542, then rallied up into the close with all the other stocks, but is pulling back $2.50 here. That 550 level still relevant here, Joel?
Yeah, I mean it is as far as a psychological level. We had identified 555.20, which was the high on December 7th. Got up to 555 yesterday. Take that out, and I think we'll make a march back towards 600. But got to close over 550 first. Sellers will be stepping down to that from the 555, probably down to 550. So nice pop off 509 here, but going to need some follow through with the close over 550.
And Google, you were somewhat concerned that it didn't make a new high there on the move yesterday. We have this high back from mid-December up there at 729.10. Yesterday's high only getting up to 727. From a technical perspective, is that potential for a double top?
Exactly. I mean, it for all you bottom pickers in this stock after the last earnings debacle, when it got down to 636, you got nearly a 90-point rally here. If you're not going to try and sell it on strength, certainly put a sell stop in at this thing, perhaps below yesterday's low, which was 716.55, because boy, it sure looks like it's kind of topping out here.
We talked about it yesterday. Facebook in that $28 area. I actually did get a short off, but I covered it yesterday. I should have held it overnight. I was thinking about holding it, but I didn't. Stock got up to 28.17, then did peel back, got under 28. Closed fairly strong, is trading back under 28 again today. Every time the stock gets above 28, it gets met with more sellers. I don't know, is that going to happen here again today?
$3 run in 3 days.
Boom,
So
boom, yeah.
you make it, you make your own call here. 28 has been the highest close since it's made the low. I think if we can get a couple closes of over 28, we can pierce in and finally get up to that $30 level. Coming back on the downside, there is nothing below this 27.42 until Wednesday's high at 26.99.
You got lots of your financials here getting upgrades from JMP Securities. They're upgrading Citigroup, Goldman Sachs, Morgan Stanley, Bank America, and JP Morgan. Stern AG upgrading Citigroup and JP Morgan here as well. So you got Citigroup trading flat here on a day we're down a little bit. JP Morgan's up 4 cents. So your financials look like they could be a little bit of relative strength here this morning.
Yeah, I mean, we make fun of these analysts sometimes, and they make us, look bad. Could be a little bit late to the party here on these upgrades. Just looking at the Goldman Sachs chart, I mean, it tested that 125 level. Has bounced nicely off that. There's really not a whole lot in this whole 130 to 140 area. You're going to need a rip-roaring rally, in the S&Ps for it to get through there. So not going to make fun of this guy too much on this upgrade, but it could be a little late.
I'll talk about that $45 level again on JP Morgan. I think I mentioned it yesterday there. I actually did get a short off up there too yesterday. Opened right at the high on the button at 45. There was some big institutional selling pressure. Stock peeled back, starting to come up there again. Gotta think there'll still be some resistance up there in the 44.90s as those high freaks lean on that 45 level.
Just think where the stock would be if it wasn't for the whale trade.
True enough, eh? Like the whale trade knocked $12 off, and here it is. It's got all of its gains back, obviously, but there is some pretty major resistance up here. So caution to the buyer here until it starts to break out through that $45 level. Citigroup too, another one to look at. If that stock starts to run, it's 41.30, $42. I'm seeing some big institutional selling pressure up there. So again, 41.90s. I think you'll see some pretty decent resistance in a stock like Citigroup.
Yeah, I think it's just interesting, with these stocks, in particular, and also the whole market. You had the big gap up, and there's a lot of people still stuck short. There's a lot of people say, "Boy, I would have, I wish I would have bought on December 31st." These pullbacks are going to be met with buyers. I mean, even though we got a big gap to fill, I don't think it's going to be free money on the downside unless you get some kind of bad news, maybe like a bad unemployment number or something like that.
Well, yeah, and we do have the unemployment number tomorrow, so obviously fundamentals always trump technicals. So depending on what the unemployment number is tomorrow, that will dictate the next move. But you've got to respect the resistance level here. We are up at resistance. We start piercing out. What was the high there from the whole move? 1461, is it, Joel?
Yeah, I was just going to point that out. We had a high of 1475. Yeah, that was September of this year. We reached that level once again back in October, 1459.75. Got up to 1458 yesterday. Let's just call that whole 1460 area. I tell you, if we get above this 1460 and hold, I was looking at the monthlies, man, there is not much resistance in there. It's kind of like one of the pocket areas from '08. But, you have to, just like that $500 level, we were looking for, Apple to crash through, and it held the support. Here you're faced with some major resistance.
Well, that's our show for today. Have a great trading day, and we'll be back with the unemployment number tomorrow.